Hello, and welcome back to the channel. I'm Algabot, your guide to the mechanics behind automated trading systems for MetaTrader 5. In today's video, we're taking a close look at an expert advisor called Cox Stuart Trend Shift. This strategy is built around a classic statistical tool, the Cox Stuart sign test for trend, repurposed as a distribution-free way to measure whether a market is genuinely drifting in one direction. Over the next few minutes, you'll learn how it converts price into a trend score, how it decides to enter and exit, and how its risk controls work. Let's get started, and remember, this is educational content only. So what exactly does the Cox Stuart Trend Shift Expert Advisor do? At its heart, it's a trend direction detector, but instead of relying on a traditional moving average crossover or a momentum oscillator, it borrows a method from classical statistics known as the Cox Stuart sign test for trend. This is a distribution-free or nonparametric technique, meaning it doesn't assume the market follows any particular mathematical shape. It simply asks a very direct question. Over the recent window of price, has the market consistently moved in one direction? Here's the core idea. The strategy takes the last group of completed closing prices and splits that window into an earlier half and a later half. It then pairs each early price with the price a fixed number of bars ahead of it. For every pair, it records whether price finished higher or lower. If a market is genuinely trending upward, most of those later prices will be higher than their earlier partners. The EA counts those up moves and standardizes the result into a single sign number called a z-score. A large positive z-score means a broad, persistent uptrend. A large negative z-score means a downtrend. A z-score near zero means there's no clear directional edge. Because it compares points that are far apart rather than neighboring bars, the method deliberately ignores one-bar noise and only responds when the whole window has migrated one way. This EA can trade both long and short. It works on a single time frame of your choosing, and it layers a confirmation moving average and ATR-based risk controls on top of the core signal. It's designed to appeal to traders who are curious about statistically grounded, rules-based systems. As always, this is for educational purposes only and is not financial advice. Let's walk through the exact logic step by step. On each newly completed bar, the EA recalculates three things: the Cox Stuart z-score we just described, a fast confirmation moving average, and an average true range value used for risk sizing. Everything is measured on closed bars, so nothing repaints. The z-score is the engine of the system. To enter a long position, two conditions must line up at the same time. First, the z-score has to cross upward through the positive entry threshold, which by default is 1.6, a level that corresponds to roughly 95% statistical confidence that an uptrend is present. The word cross is important here. The EA remembers the previous bar's z-score and only acts when the value moves from below the threshold to above it. That way it responds to the moment a trend becomes significant, not every bar that simply stays significant. Second, as a confirmation filter, the current close must be above the fast confirmation moving average, which helps avoid buying into an isolated upward spike. The short side is a perfect mirror. The EA signals a short when the z-score crosses downward through the negative threshold at -1.6, and the close is below the confirmation moving average. If an opposite position is already open when a fresh signal appears, the EA closes it first and then reverses. Exits work on the same statistical idea in reverse. The core exit is loss of trend significance. If you're long and the z-score falls back below zero, the drift has evaporated, so the EA closes the trade. If you're short and the z-score climbs back above zero, the short is closed. This lets a position stand down before the trend fully decays. On top of that, every trade carries hard protective levels. The stop loss is placed a set number of average true range units away from entry, 2 by default, and the take profit is placed further out, 3 ATRs by default. That gives a take profit that sits farther away than the stop, and those distances adapt automatically as volatility changes. Remember, stops help manage risk, but do not eliminate it, and losses are a normal part of trading. Let's look at the actual MQL5 code running inside the Expert Advisor, styled here as you'd see it in MetaEditor. At the top are the input parameters you can adjust. Windows sets how many completed closes the Cox Stuart test examines. Entry threshold, defaulting to 1.6. is the z-score magnitude required to declare a significant trend. Confirm period is the length of the fast confirmation moving average. ATR period, StopATR multiple, and TargetATR multiple control the average true range stop and target distances, while LOT sets the trade volume and magic tags the EA's own orders. Below the inputs are the two Boolean flags that detect a fresh crossing. Fresh long is true when the previous z-score was at or below the threshold and the new z-score is above it. Fresh short is the mirror, true when z crosses down through the negative threshold. Now the buy block. When fresh long is true and the completed close is above the confirmation moving average, the EA reads the ask price, sets the stop loss a number of ATRs below entry, sets the take profit a larger number of ATRs above, and calls trade.buy with those levels. The sell block is the exact opposite. When fresh short is true and the close is below the moving average, the EA reads the bid price, places the stop above and the take profit below, and calls trade.sell. Both sides share the same symmetric, ATR-based risk structure. Clean, transparent, and fully rules-based. Now let's bring it all together on this illustrative chart. The candles are on top, and beneath them is the subpanel showing the Cox Stuart trend z-score. You can see the dashed green line marking the positive uptrend threshold at plus 1.6, the gray zero line in the middle, and the dashed red line marking the downtrend threshold at minus 1.6. The gold curve is the z-score itself. On the price chart, the smooth line weaving through the candles is the fast confirmation moving average. Look at the opening candles on the left. Price is drifting sideways to slightly lower, and down in the panel the z-score sits below zero, dipping into negative territory. There's no broad directional edge here. The early and late halves of the window roughly cancel out, so the test reports no trend, and the EA simply waits. Then the character of the market changes. A series of higher closes begins to form. Watch the gold z-score line climb. As more of those far apart price pairs finish higher than their earlier partners, the count of up moves grows and the z-score pushes upward. It rises through zero, keeps building, and then crosses up through the plus 1.6 threshold. At that same moment, the closing price is sitting above the confirmation moving average. Both conditions are satisfied, and you can see the buy entry marker print on the chart. This is the strategy responding as a trend becomes statistically significant rather than guessing at a bottom. From there, the uptrend does its work. The next candles continue to make higher highs and higher closes, and price runs upward toward the take profit target, which was set 3 average true range units above the entry. You can see the take profit marker as price reaches that objective. Notice that the reward distance is larger than the risk distance. With a stop 2 ATRs away and a target 3 ATRs away, that's a reward to risk of 1.5 to 1 on this illustrative trade. Now watch what happens next. Price stalls near the top and begins to roll over. In the panel, the z-score peaks and starts falling as later closes stop beating their earlier partners. It slides back through zero, which, if a long were still open, is exactly where the EA would close it on loss of trend significance. But the move keeps going. Fresh lower closes stack up, the count of down moves grows, and the gold line pushes deeper into negative territory until it crosses down through the minus 1.6 threshold. At that candle, the close is now below the confirmation moving average as well. Both short conditions align, and the sell entry marker appears. The short trade then plays out as the downtrend extends. Each following candle prints a lower close. Price works its way down, and it reaches the take profit target placed 3 ATRs below the short entry. The take profit marker shows where that objective is met. Just as with the long, the protective stop sat above the entry, a set number of ATRs away, so the risk on the trade was defined before it was ever placed. So across this single sequence, you've seen the complete cycle in both directions. The z-score measures whether the whole window has genuinely migrated one way. A fresh cross of the threshold, confirmed by price relative to the moving average, opens a trade. A collapse of the z-score back through zero, or the ATR stop and target, closes it. It's a clean, symmetric framework driven entirely by a statistical measure of trend, not by prediction. Keep in mind this is a simplified illustration. Real markets are noisier, signals can fail, and losses do occur. This walkthrough is for educational understanding only. That brings us to the end of our deep dive into the Cox Stuart Trend Shift Expert Advisor. We've covered the Cox Stuart sign test at its core, how price is converted into a sign z-score, the symmetric long and short entry rules, the significance loss exit, and the ATR-based stop and take profit that manage each trade. I hope this gave you a clearer understanding of how a statistically grounded trend system can be built and automated on MetaTrader 5. Remember, everything in this video is educational content only and not financial advice, a recommendation, or a solicitation to trade. If you found it useful, please like the video, leave a comment with your thoughts, and subscribe for more MT5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.